Retail on a wild ride this week. Tuesday saw poor results from Kohl's and Home Depot, but Target and Lowe's reported strong numbers yesterday. Check out the year-to-date moves that we've seen here. Target now up by 91%. It was a huge jump yesterday, but that stock had a good head start before those numbers yesterday. Costco up by 48% and Best Buy up by 40%. Of course, on the other end of the spectrum, L Brands down by 39% this year. Gap down by 37% and Macy's down by 50%. Joining us right now to talk about the state of retail and the consumer going into the holiday shopping season is Liz Dunn. She is the founder and CEO of Pro4ma. Also, Larry Cheng, who is founding partner at Volition Capital, and welcome to both of you.
Thank you.
We do have more numbers coming today. Macy's reporting in just about 15 minutes. Liz, that is one of your least favorite names. You want to lay out what you're expecting in the numbers today?
Yeah, I think, Macy's typically beats on the bottom line in the current, in the quarter they're reporting because they buy back a lot of stock and they usually guide conservatively for 1 quarter out. But the fourth quarter guidance looks somewhat aggressive. And if Kohl's can be used as a blueprint, it looks like that probably needs to come down.
What separates the haves between the have-nots? Because there are some big distinctions between these.
Yeah, I think, the mall is a bad place to be. Department stores are out of favor with consumers. I think it's maybe because how they've managed their business over the long term, but also, consumers have been abandoning malls and shopping more the big box retailers. When you have Target and Walmart putting up the types of numbers that they are, it just sucks a lot of the oxygen out of the room for everyone else, particularly in apparel. I mean, Target's apparel numbers were quite strong.
Larry, we had Brian Cornell, the CEO of Target, on yesterday, and he did talk about how they've been stealing market share and thinks it's coming from a lot of the mall-based retailers because people aren't going there, they're coming to his stores instead. How do you kind of sort through the wreckage? Do you look for any of the names that are down and out right now, or do you say you got to stick with the ones that have been doing so well?
Well, I look for retailers that are embracing an omni-channel world, and Target is a perfect example of that. They are turning their retail stores into fulfillment centers, fulfilling curbside, fulfilling in-store, and they acquired Ship for $500 million to do same-day delivery. So that's a great asset for them that Amazon can't compete with. Additionally, I think Target's done an amazing job with merchandising. If you walk through their personal care aisle, you will see a plethora of emerging D2C brands that have been born online that consumers are flocking to, and that has been drawing consumers back into the store.
Let me ask you about a stock we just looked at. It was on the board, Nordstrom, not doing as well. You might have thought that they would have had a head start when it comes to fulfillment for e-commerce because they did so much shipping before e-commerce ever came along. What happened?
Nordstrom's was very innovative about a few years ago, buying Lowe and a number of other emerging technology companies. But they seem to have lost their edge. They tried to partner with Bonobos, but that hasn't been the draw that they've thought in store. So they need to revamp their technology thinking, and I think they're on their way to do that.
Would that be a stock you'd consider, or you have to wait and see until they actually make some progress?
Nordstrom's in the '08 downturn fell about 80 to 90%, peak to trough. So I'm not sure this is the time to buy that stock. But to be fair, JCPenney, Macy's, and others also fell by that order of magnitude. In this day and age where markets are at peaks, what performs well in recessionary times in retail is really the discounters. So TJX, Walmart, Dollar Tree, and so forth. Those are places where you can kind of weather the storm.
Liz, I know Target is one of your favorite names, too, but you also like names like Lululemon and TJX. Why those two?
Yeah, I think discount is obviously a great place to be right now. TJ has been outperforming, but I also think they're just a really phenomenal retailer. The home goods and home sense businesses give them a whole nother leg of growth. And so I like them quite a bit. Lulu, it's really a global brand. It's an emerging global brand, and there's so much opportunity there for growth. They've been able to carve out this lane of kind of aspirational price points, and I think they're a best-in-class company.
Larry, the other place that we've seen a lot of shakeup is this idea of brands that are trying to go direct to consumer. Nike may be the biggest one that made headlines saying it's not going to go on Amazon anymore. But there have been rumors circulating that Target would potentially be another retailer that would add Nike to the list. What do you just think about direct to consumer, what the future of some of these brands is?
If you look at every single consumer product category on the planet, there are emerging brands that are born online, engaging with customers on social, often have authentic stories of better for you, better for the world. And they are clearly growing way faster than the legacy brands because the emerging consumer doesn't want to buy their products from P&G, Nestle, and Kraft. So retailers need to be aggressive about partnering with these brands, if not acquiring some of these brands like Walmart has, because that's where the consumer is headed. They want niche, authentic, real brands that they engage with, not the consumer conglomerates.
No, better not go to Real, I guess.
There you go.